Hello friends, welcome. Friends, as you know that Indian rupee has been depreciating and it is a matter of concern for everybody living in India, whether it is the government and whether it is the private citizen. The reason it is of concern is that the import inflation because of the rupee depreciation is going to have a negative impact on our country. Because the more the rupee depreciates, more rupees we have to spend in order to import a certain quantum of commodities which we were importing earlier, because we have to convert larger rupees to buy the same amount of dollars to make our foreign purchases. For example, if you're buying oil, gold, electronics, all is going to require more rupees. So there will be a possibility of import driven inflation, which will spiral our inflation going forward, because more and more things are going to become costly in our country because of the depreciating rupee. That is why RBI has been working day and night in order to control depreciation of rupee by spending the foreign exchange that they have on to able to create more demand of rupee by buying more by seeding more dollars into the system, so that the demand of dollar versus rupee can be put in equilibrium so that depreciation does not take place. But irrespective of RBI intervention for such a long period of time, or such a, we have seen that we have almost spent around 50 to, $75 billion, right? And the foreign exchange actually has gone down significantly, in spite of the fact that rupee is now depreciated at a lowest level what it was earlier, right? Now friends, what I have done is I have gone to the Bank of International Settlement. Now Bank of International Settlement maintains a database of all exchange rate versus dollar. So if you go here and if you click on statistics, then you will get this data set and you can download this data set and you can process it for your visualization. Now you don't have to do all this work, which requires a lot of effort and activity, because this data set has to be updated on a regular basis. And once this data set is updated, you have to update your visualization charts, etc., which will require a lot of time and effort. So I have done it for you and I have uploaded this in my website. Now, if you look at this is the title of this chart, or this page is called Global Currency Trend Comparative Analysis Against US Dollar. So you will see that this is the chart and this is a dynamic chart, right? If you go here, you can basically use this chart and you can control this chart to see different type of views in different time scale. Now the time scale you can see here is plotted here, and then you can see all these lines all over the place, and then there is a vertical table which lists currencies in a serial manner, giving a certain particular rank here. You can see the rank number here. I'll explain to you everything in this video, and we will talk about how much a particular currency has depreciated, how Indian currency is placed, or you can say how Indian currency maps to other nations where currency has depreciated, and what is the main reason, which I have already done a video earlier, which we have to take into consideration for a depreciation currency, and what kind of intervention a reserve bank does or a central bank does in order to prevent depreciation, and why. Because we have to look into the aspect why there needs to be an intervention by a central bank, and why those interventions are not sustainable for a long period of time. You will see that in spite of the fact that Reserve Bank is intervening to contain the depreciation of rupee, its intervention does not sustain for a long time and rupee keeps on depreciating. So in this video, we are going to answer all these questions. So be with me till the end and it will be very useful. And not only it will be very useful, you will be able to get the access to this dynamic chart to be able to see that how rupee has fared against other currencies, which is very, very important to understand. It is not about India. It is all about the world. Okay. So if in this chart, you will see that there are various controls here right in front of you, which is you can choose different type of time metric, means depending on the granularity of the window that you choose, month, quarter and year, this particular time axis is going to change. So you can zoom out and you can zoom in. Similarly, you can choose the number of time units and you can move back in time and back and forth in time. And this vertical column that you see here, which lists the number of currencies based on a certain metric, is the amount of depreciation which has happened in the month of depreciation or appreciation which has happened in the month of December. So it is ranking the currency in the last month. And what is the last month? So let me explain this chart. These lines are not absolute values. These are ratios. And why I have chosen ratios and why I have not chosen absolute value and what is the meaning of ratio? Now, if you look at absolute values of various currencies, you will find that they are markedly different in absolute numbers. For example, rupee is around 80, 85, etc. And there are some currencies like, Russian rubles where the rate is 105 or something like that. And then you will find that there are some currencies which are completely different in numbers, maybe very, very large. So if you are going to plot all these currencies in an absolute manner, in a graph, you will not be able to make any sense because those numbers are going to go haywire and is not going to give you the larger picture. So what I have done is I have chosen a window period, and within the window period, the start of the window period, I pegged all the currencies at a particular reference point, which is 1. 1 means that whatever may be the absolute value of the currency, right? That absolute value has been normalized as 1. Now, as you move forward in time, let's say if I'm going to move forward in this direction, then whatever happens about absolute value will change. So instead of taking the absolute value, I'm taking the ratio of from this particular point, the start of the window period, which gives a very good flavor as to what is happening to the currency. Now, if the currency is heading in this direction, which means that it is depreciating, means the ratio is becoming greater than 1. And if it is going in this direction, means it is appreciating, means the ratio is becoming less than 1. And I end up measuring the ratio at the end of the window period and I am plotting this table. So able to tell you that which currency has been ranked first, second, third, fourth from a point of view of depreciation. So you will see here Sri Lankan rupee strangely is a currency which has appreciated and now the ratio is 0.799. It has hugely depreciated. So when I zoom out, you will be able to see the trend. Now, one important thing which I am going to tell you in this chart, which you have to observe, you will find that these lines you see, these are individual lines. Okay. And when you go and click on a particular currency, that particular line will get highlighted. It's an interactive dashboard. You can click anywhere, the line will get highlighted to able to tell you that what is happening, how that currency is volatile or stable depending upon the highlighted line, because it becomes very difficult to otherwise tell because this is going to become too confusing. So I have given you a control here to just click and see which currency is behaving how. Now you'll find that, for example, when I click on Malaysian currency, you'll find that the Malaysia's currency has been very volatile over this window period. It has gone up, then appreciated, then is again going up. Whereas rupee, which is 18th in the rank of depreciation, you will find that this is quite stable. So one of the very, very important role RBI plays is to keep the currency depreciation or appreciation stable, not to make the currency very volatile. Now, friends, you will ask me a very important question. Why? Why should I not let the currency behave whatever way it wants? Because whenever some trade activity happens, the trade activity always happen over a window period. Now, within that window period, if any business activity is happening, and let's say if I am trying to buy some commodities from outside and I spend certain rupee in order to, purchase dollar, and I am in the process of business, then what happens is that if the volatility is too large, then I end up either incurring currency losses or currency gain, which is not good for the business. In order to prevent currency losses and gain, RBI intervenes to make sure that the currency's volatility is controlled. That's the objective of RBI. RBI objective is not to manipulate currencies, and it will not be able to manipulate currencies because RBI does not control the inflation that is happening in US versus, which is the point of reference of comparing the volatility or the depreciation or appreciation of rupee. Because currency's appreciation and depreciation has got nothing to do with from a longer window period, it has got nothing to do with the RBI intervention or the demand for rupee and dollar. It has to do with inflation. If a country's inflation is higher, its currency is bound to depreciate it versus a country whose inflation is lower. It is as simple as that. Okay. So RBI has no role to play, and that's why whenever RBI intervenes, RBI only intervenes to maintain the currency stable, to prevent businesses making huge currency gains and loss. That's all. So RBI has been able to do a very reasonable good job, and if you see here versus other currencies which are extremely volatile, rupee's volatility is reasonably managed by RBI. Therefore, you will find that RBI has been doing a very reasonable job. Now, if I take a larger window period, for example, quarter, you still see that rupee's appreciation and depreciation is not very volatile versus some other currencies. They are extremely volatile. Why you are seeing this curve like this? Because these are averaged out, right? These are not smooth curve because these are not daily numbers. But within this window period, if you look at, rupee has been reasonably stable for those window periods for which the businesses happen and where currency gains and losses are to be managed. So that way, if you start here at this point, the rupee was, rupee was 54 in January 13, in 2013, and in 2014 October, the rupee value is how much? 84, right? Now it has gone to 87. I'm just taking up an average number. So you'll see that the rupee has depreciated by, or the ratio has changed by 1.533. So you'll see here, where is rupee here? Rupee is this 11th number. So within this window period of 10, 11 years, the biggest depreciation countries were Iranian rial, Russian ruble, Brazilian rial, Pakistani rupee, Sri Lankan rupee, South African, ZAR, I don't know what is this currency, Mexican peso, then Indonesian rupiah, Japanese yen, Australian dollars, and then comes the Indian rupee, right? So if you look at, and then there are other currency which has not depreciated that much. It is very strange that look, Bangladeshi taka, it has not depreciated. It has depreciated in recent time from January. You can say from October 2021 till October 24, the depreciation was very, very high. But before that, the currency was quite stable. The Bangladeshi economy was doing pretty well. There has been a significant change here. I don't know why. If the currency actually has gone haywire. Then we have got Mauritian rupee. You see, kind of behaving similar to one Indian rupee, Philippines peso, and then we have got Malaysian ringgit. Mauritian rupee, not Malaysian, Mauritian rupee, Malaysian ringgit. Then we have got New Zealand dollar, then Canadian dollar, then we have got Korean won, then Danish krone, euro. You see, euro is this, and then we have got pound. You can see that, and then we have got Chinese currency, right? So Chinese currency has been reasonably stable. It has not depreciated. So what I'm trying to say, friends, is that you can compare the depreciation of various currencies in this chart. You can use it for different time window, and that will give you a very good insight as to what is going on as far as various currencies are concerned and how rupee has fared against other currencies. But the most important fact which has to be remembered, again I am emphasizing here, RBI intervention, if at all is there at any point of time, which is always there, is to maintain and contain volatility of rupee versus dollar. RBI cannot control depreciation of rupee because RBI cannot control the inflation of other countries. The other countries' inflation levels can be much lower. So if RBI really wants to manage rupee to a very low level, or rupee does not depreciate too much against US dollar, then the window of inflation control that RBI has, which is between 2 to 4%, it has to function at the lower level of the window, which is 2% and below. Then only the rupee will stabilize. If our inflation is very, very high, whatever may happen, right? Whatever intervention RBI will do, it will never be able to contain depreciation of rupee on a sustained level for a long period of time. So friends, I hope that you have understood. You can go and have a look at this chart. This chart is there in my website. and you can play with it, and it'll keep updating it as new data is posted by Bank of International Settlement. Okay, thank you for your time, and I hope that you will like this video. I'll come back with a new video next time. Thank you.